man who's going to moderate from Huffington Post.
Thank you. Yeah, why don't we have the panelists come up? Great. Christina and Jean. So I'm Ben Arnon. I write with Huffington Post. I also have contributed articles to thehill.com on security tokens. I have several articles in HuffPost about crypto in general and blockchain. I also just launched a podcast called Blockchain Bridge. And I am actually also have a film and TV company, so I'm exploring the possibility of launching a security token in the future that would tokenize the underlying IP assets of the company. But I'm not actually at the stage where I'm actually moving forward. So, here we have with us 3 people who are literally in the process of issuing security tokens. One person who has issued a token in the past, and so I really want to get into the psychology of what the process is like for them as business owners. So to start, why don't we maybe go down the panel and just take just a brief moment, maybe 2 minutes each, introduce yourself and your company, and talk about why you've decided to issue a token as opposed to potentially raising capital through other means.
That's a very good question. So my name is Gene Grant. I'm with VRBex, and we are setting up a financial services company for the crypto industry. And the reason I say that as opposed to a security token exchange or a cryptocurrency exchange is because either one of those two terms are a little too small for what we have in mind. The idea is to be the premier financial services firm going across the cryptocurrency space. And I'm very careful about using the words financial services firm because the background of my founders, there's 7 of us, we've all spent our lifetimes working in major financial institutions. I was a managing director of BBVA at the last place I was at. My partner, David, he was a managing director and head of corporate investment banking at BBVA for the United States. And before that, in BBVA Bancomer, the largest bank in Mexico. The other members of our team are also old, experienced bankers, with one exception. Our 7th founder actually spent his entire career with the Central Intelligence Agency, where he retired as a deputy director. So for us, being all, let's call it slightly older individuals, we wanted to make sure we did it right, and we did it the right way once. So when we were looking at doing a launch of our fundraising, we looked at doing a traditional preferred equity. And in fact, our deal is very much structured like a traditional preferred equity. We're a Delaware corporation. We're issuing preferred stock. We have a dividend, a quarterly dividend, 15% of the gross, top line. We have traditional drag-along rights. We have liquidation preference, all the kind of stuff that a standard investor would look for in a financial services firm. But because we're playing in the crypto industry, we decided to look at tokenizing it. And then the more we looked at the token, the more we liked the features that come with it. The 2 main features, of course, are price discovery and then liquidity. As Carlos said in the introduction, valuing liquid assets is something that security tokens are going to be really good at. And the other secondary benefit, of course, is liquidity. So those are the main reasons that we were looking at it. We can't really be players in this space the way that we want to be unless we start through the process first. So one of the advantages that we have when we were starting our business, and whether it's the cryptocurrency side or the security token side, is that we've lived through the process. And working with Securitize as our partners, it really taught us a lot about this particular space and some of the interesting things that we didn't expect along the way. But I'll leave that for later.
So, hi, I'm Cristina Dolan, and I'm a co-founder of iXledger. Michael, back in the back of the room, is one of my co-founders as well. And we're not a security token, we're a utility token. And sort of the genesis of iXledger was really to provide a solution for insurance, a marketplace for insurance. Our other co-founder who is not here is Ingemar, who was the former CTO of SunGard. And so our approach to this wasn't really about a security and a financing mechanism, but it was really about utilizing the blockchain as a mechanism to be able to create I look at blockchain as the ability to create a journey of a customer or a claim or some sort of an entity, and the ability to track that across siloed systems. In the insurance space, you have a lot of fragmented data that belongs to a variety of different players that you need to be able to pull together in order to be able to present that to an insurer to evaluate, the risk on that particular policy. And so blockchain actually facilitates that. And so when we look at the token as a mechanism to facilitate kind of an economic or other types of values within that ecosystem, it's a lot easier to bring a lot of players together when there's data involved. If you have a mechanism like blockchain, whereby you're using smart contracts and the technology to create a journey that you can't get out of a centralized system, and then be able to convince all the players around the table to actually work with you. So blockchain was actually the driver because of the ability to facilitate pulling together all the little shards of data required in order to analyze the risk associated with a particular entity. And so the token has other capabilities. It's not necessarily a security per se, and so it's a utility token.
Yep. Hey guys, I'm Matt, co-founder of Lottery.com. We're obviously in a highly regulated space, being lottery and being partnered with governments and trying to get state buy-in for what we do. Obviously, when we founded this, my partner Tony is not here. We founded Lottery.com about 3 years ago under Auto Lotto at the time. It's very, I'll say that we had to come in and lead the space in what a regulated behavior would be to purchase lottery tickets online. We're actually the only company in North America where you could play the lottery online, and let alone in multiple states. And so that positioned us, I think, as a thought leader in the regulatory space in that regard. And then when you come along and you look at fundraising, we had this intersection in August of last year, I think, where we were entertaining our Series B valuations and offers. And it just became obvious, I think, and I think it's probably why everybody's here and why everybody's who's here now is bought into crypto. It's just obvious that VC's dead, right? Like, it's just a matter of time, but VC's dead. And so when you for everybody, like, I can't tell you how many investors we have that like got squirrely or worried about it or whatever else. And even that's its own model, right? A lot of them were like Carlos said, are you going to go to jail, right? Like, what happens if it's bottom line? What happens if you guys get the blah, 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 blah. So, but the point is that, post this, they have an opportunity that, like, if they don't believe, they can just get off the ride, right? They don't have to, like, put their money in for 7 years or 10 years and be locked up and need to deal with, like, crawling, all over you about, what's the performance this week or that quarter or whatever, where they need board seats and they need control, and you're fighting for this as the entrepreneur and all of those things. You eminently have a elegant way to break up with investors if you were so inclined, or vice versa. So liquidity is the cute word. I won't say cute word, but like, liquidity is the favorable word we say, because everybody favors liquidity and you can get off it in some ways. But also it's flexibility, right? It's flexibility in financing. It's flexibility whether you want to do a whole product, or flexibility whether you want to do equity, or flexibility whether you want to do board votes and control and all that. And in that way, the feature set is so much more rich. It's like TV versus radio, right? So I'm sure at some point everybody was like, radio's not dead, and I don't know, FM's gonna change the future, but it's just so obvious to me, right? Like, it's color TV here. So that's why we're in the space, and we either had the fortune or the misfortune to, like, have traversed this, like, incredibly hard regulatory environment. And I will say, we are at this point 30 days away from launching in New York, where we've passed regulatory and statute laws now. So for anybody who actually lives here in New York, you'll get to play online through us officially next month, probably. I'm done.
Yeah, so I was convinced that VCs have been there for like 20 years, since I started really building tech companies. In that period of time, I raised over $250 million for different startups. The biggest success story that I had is a company that was a reverse merger with a voice over IP company out of China in 1999 with a almost bankrupt real estate company in Miami, and we turned it into $2 billion exit. So when people say that, tokens or all that is risky, I'm like, we've seen risky, but we've seen what you could do when you are creative and you follow regulations. And we took it public, that company particularly, and So when I met Carlos in January, he told me sort of the vision of security tokens. I'm like, this is amazing. This is exactly what I need. Because ourselves, the same thing that you describing, the VCs don't get it, and they don't get, especially in our case, we have a company that turns data into knowledge for really large enterprises. We have a revenue generating company with 40 Fortune 1000 companies, corporations. And my vision was I want to create a marketplace. I want knowledge to be to be able to be transacted in a safe way. And obviously we looked at blockchain as a technology, and I said I want to create a. And VCs didn't really get what I was trying to do. So what we're doing is actually trying to innovate a model where we actually offering two mechanisms for an investor. We're selling a security token, which is an equity interest in our company, and we're giving away a utility token of a protocol that we announced Monday we're creating called Graphos, which would be an operating system for knowledge graphs. And we're building that with a consortium of companies. So in a way, we sort of giving two mechanisms for the investor to be able to realize value, but obviously the equity is very traditional. It will be tied to the success of our company in traditional metrics. And then Graphos in itself, if evolves, given the vision that we have, could actually make the investment quite lucrative. So it's the only way that we were able to experiment in this thing. And I talk to VCs and they don't really understand what I'm saying to this day, which actually for me is amazing because it means that there's a window for those of us that are have the balls or the cojones to go for this. So yeah, that's it.
Matt, I have the next question's for you. Lottery.com is a very global raise. Talk about that. Talk about the intricacies and some of the obstacles or hurdles that you faced raising in such a global capacity.
Yeah. So to contextualize that a little bit, our ICO, and there's all these rules about like what I'm supposed to say and not supposed to say in a PPM and all that. So like if we can just throw that out for a little bit, it's a lot better, and the lawyers will be less mad at me, right? But we're doing like a full-on PPM, right? And I think that's the maturity, that's the eventuality of where it all goes, right? We're doing like a full-on PPM. The reason why we would do this as opposed to an IPO, therefore, other than like the froth in the market, which could be some accusation, right? The reason why we're doing this is because it gives us the flexibility to do a democratized royalty deal based on a product, right? That's something that's kind of never existed before. So if you buy a share of Apple, I say, then you're buying into the phone, which will be successful, and you're buying into the iPad, which is probably going to do pretty well, and then you're buying into like the watch that nobody buys or cares about, and that sucks. And then you're buying votes, but your vote doesn't actually mean anything because you're small, right? And so there's some premium in that, and maybe you're buying liquidation preference and all these other things and that's the set, that's the format. But what if you could just put money up and get like $50 every time an iPhone sold, right? Like what if you could just finance the iPhone 11? And what if actually their payment processor at the Apple stores could reconcile that in near real time or immediately, right? Instead of like a quarterly results call and dividends and like should Apple spend $100 billion on buyback or go buy some other company or whatever, and people gaming that security 3 weeks before and 3 weeks after and trying to long it and short it and all that stuff. What if just like nearly real time, there like a credit card swipe and that yield was paid out to the economy, right? However that's resulted. That level of flexibility seemed really cool to us, right? And it gave us a way as a company that was not a debt obligation and it wasn't an equity surrender, but rather it was a revenue participation on a future product. And royalty deals you actually only see in Hollywood today, and it's sort of a closed, tight-knit game, right? So we knew that was the crux of the opportunity we wanted to do, and it would also give us an opportunity to similarly reward other true believers, right? Like our marketing partners or whomever else. But our product as a set then was, what product, what is our iPhone that we're launching then, right? So we're doing this global charitable raffle. We have a number of good partners there, and some I'll wait to announce based on set paperwork, but they're global, they're big, they're world-solving partners and issues. And so but we're a U.S. company, right? And we're super white hat about everything regulatory side. And I often make it my job to like fly around and meet with various attorney generals and convince them that what I'm doing is super legal. So from that perspective, we needed to follow that high road in every regard. And so obviously Securitize was a wonderful solution for us. There's a couple other players in the space that I think are critical to that. We have a proper broker-dealer, the proper PPM in every other regard. It looks like a classic security deal, I think. So.
By the way, I forgot to mention, we'll go for about 45 minutes, and then we'll open it up to the audience for Q&A. So this is a question. We'll start with you, Cristina, and I'd love to hear from others as well. Along the process, and you already went through the journey of launching your token, what were probably the one or two most surprising things that you encountered? What were possibly the biggest challenges and hurdles that you encountered?
So just to put it in perspective, I was a co-founder of a company that we took public in '99, which was very successful, and it was IPO. And so that was a very gnarly process, totally focused on documentation and sitting around the table with lawyers and looking at the S1 and all that typical stuff. But I think that what's kind of interesting, I'm an engineer, so I kind of look at things from the bottom up, and I think that there's a lot of trends that are making the tokenization of securities interesting, and the utilization of utility tokens. And it has to do with the interest in visibility, which obviously from a compliance perspective is a requirement. You think about MiFID. MiFID's about the journey of a trade, right? But typical systems today don't, trading systems are about matching engines. They're not about the journey of a trade, right? And so you think about supply chain systems. They're not about the journey of a product. They're basically about, inventory, supply chain's about inventory and managing that, right? So there's an interest for branding perspectives, compliance perspectives, a lot of different new initiatives that require journeys, and today's systems don't provide that. But you need to get data from a lot of different parties that have that data, and now they realize, data's worth a lot, I'm not giving it to you, right? And if I do, it's a liability, so I want to have a paper trail associated with that. So blockchain actually matches what's going on in the industry from a compliance perspective, as well as industry in terms of data and trust. And so when you layer all that underneath the tokenization and securitization, it all kind of fits together. So the business model and the technology is a very big part of this overall concept. And just wanted to add one thing. I don't know, how many of you have kids who play video games? And so, we're training kids today with this last version 8 of these video games. They earn pride tokens. In the olden days, they had these people who create these video game environments, but now kids enslave themselves to create the environment, right? And then they invite their friends to actually play with them. So they, 1, build the environment, and then 2, do all the marketing to engage all their friends, and then they get, value and pride. It's not monetizable, but it's pride, right? That's a tokenization model in which the limbic system gets excited and people inside the community market for you, right? So you have to take that into consideration, that it changes the dynamics of a business model, it changes the rails, and it creates a whole new set of business models in which when you sit down at the table with a bunch of partners, it's not business as usual. It's not like creating a website with a centralized database and creating a UI and saying, oh, okay, this is how it's going to work. Have a nice day. We'll create this spec and launch that in a couple weeks. It's a dynamic organism and an ecosystem in which you have to get engagement. And I think that's where it gets a layer of complexity to get all the players involved and then get them to understand the value proposition from a business perspective and not just Roblox. Roblox actually does well. My kids make all these environments and invite all their friends, so they do the marketing, the building for free, and they make money.
Demian, what about you? We were talking before about your structure. I think you mentioned the convertible note structure. Talk about that and some of the complexities that may have added to your journey so far.
Yeah, so I borrowed some of inspiration from you guys, being the thought leaders. Your convertible note structure that you started with. So we actually, again, have done quite a bit of security races. And we found, at least for our prior pre-sale, we developed an instrument that is a convertible note that converts into either equity or tokens. based on a qualified financing event. And if that doesn't happen at maturity, it actually automatically converts to equity at a pretty fine price. So and it's a PPM and it has a lot of risk disclosure. So we found that to be a lot more friendly to investors than maybe SAFT or other things that I just felt, SEC or anybody would never feel that you're sort of protecting the interests of the investor. And we did our private pre-sale as a 506B offering, so Reg D, exempt with very small circle of people that we had in our network. That's how we started, and I think it was very well received. And one of the things that sort of surprised me is, number one, the level of sophistication of the investors that we've been meeting with. Again, unlike VCs, they're risk takers. They know they're building sort of a new internet, let's say, in a way, but at the same time, they're not fools. I mean, they know more about technology, about the particular technology than I do. So I'm learning from them every day. And also, they're very creative about how to create liquidity and exit the business. I mean, they're able to sort of do OTCs over, they're very, very sophisticated vis-a-vis a VC that is just basically, like absolutely no value. So yeah, in that sense, it's been a very different than dealing with traditional VCs. And again, if anybody has questions about how we actually structure it, I'm more than happy to share and save you some money with lawyers.
Gene, a question for you. If you were to start this process again right now, would you do anything differently along your journey?
Oh yeah. You learn things by doing. So as background, I took an early stage company public on the London Stock Exchange back in 1999. So I've been down this road. I'm a registered securities principal, so I'm already very familiar with the FINRA rules, and I've been involved very much on the other side of the desk. So in this particular raise, we took some advice on the way to structure the deal, which we're very happy with the structure of the deal. But then we decided to speak with people, investors in let's call it the crypto community. And what we discovered is that a security token is not very well understood in the crypto community. In fact, they prefer the words pump and dump. So we had a lot of interest early on in our issue. And then we sent out the PPM, which is very well structured. And then they got to the phrase that said 12-month holding period. And that is not something that the pumper and dumpers are used to. So the thing that we learned is that the audience that we thought would be very receptive to this offer, which is the people involved in the crypto industry, the participants in the crypto industry, the ones that understand it the most, are the least interested in putting their money in because they want to speculate and trade on pumping and dumping and in their little consortiums that bring things up and down, not actually investing. So what we would do differently is where we are now. Like you, we haven't announced it yet, but we're very shortly engaging a broker-dealer. And so we're going to keep our new structure with the security token, but we're going for a more traditional way of meeting investors and going for the more traditional investors who are actually looking for a wealth play, because that's what we are. We're a wealth play. So the future of the industry is very much tied to our performance. If the industry does well, if people want to continue to buy crypto and buy security tokens, then our firm will do well. We're not a pump and dump. So now we know. We're in a transitional phase, I think, as the members of the public, members of our crypto investing community are learning the difference between a utility token and an illegal instrument, which is not necessarily a utility token, and a security token. So in that road, that path, there are varieties of different things, and they're so used to that large level of liquidity that they are just learning what a security token is. So more traditional investors, I think, is the right way to go.
That's a great point. Maybe we could go down the panel, starting with you, Cristina, and then down. In terms of investors, with your token last year and both of you, have you encountered that same experience where investor sentiment might be not completely aligned with where you thought it was at the beginning of your journey?
Well, we actually have a very active community and a large one for a company that's our size. So I think we've done a really good job. And I would actually say that we've been pioneers in many different categories. The first insurance company, be on the blockchain. I mean, we have a lot of firsts, and I think we've done a pretty amazing job of staying on track with respect to our goals and objectives while running like 100 miles an hour or 1,000 miles an hour at all times. I think that one of the difficult parts is that you have many different facets that you have to educate along the way. But when you have an active community, kind of like back to this whole roadblock thing, is that when your community inside is active and engaged, it has a very different sentiment than like trying to market from the outside and engage people who are not really engaged. And so I think it's quite an asset for us to actually have such an engaged community that's rooting for us all the time, and they give us pointers and feedback, and so it's been great for us.
What about you, Matt?
Yeah, I think you're absolutely right. Pump and dump and like it was interesting to go through because this industry, everybody knows it changes every 3 months, right? And when we were making our decision in August, there was like a real argument about utility or security token and the timing, right? And what about the fork and when is it going to come back? And everybody was concerned about like these very hyper small periods of time. And it wasn't just investors, right? Like founders too were creating things that they just like throw a white paper together in a weekend and make a bunch of money and bail, which is sort of unhealthy for the long term overall of what it could be. But it seemed evident that this had to mature. One of the biggest I think issues is that it's a fundamentally global technology in a fragmented regulatory environment, right? So 12 months is true for the U.S., but it's not necessarily true for everywhere else. So does that put some investors at a disadvantage over other investors and things like that? Like, how do you create parity for your investors? But ultimately, I think we drove to, and by the way, there's a nice cadre within the crypto community that is intentionally resistant to the regulatory, right? Like they're not actually bought into that vision. They're still living in July of last year, where now the mantra is like airdrop and never regulate me and all that stuff, right? And so cool, like that's totally enjoy it, and the Wild West will continue to surge for you, but for us and for ultimately the critical mass that is required for this technology to become meaningful in our globe, right, is that institutional investors have to be able to get in, and institutional investors have to be able to sue somebody, right? Like they can't get in with like anonymous white paper, and so we and by the way, they write the biggest checks, right? Like they write, if you want a 9-figure check, you have to be suable, and so that's I think really what drove us towards that paradigm, and so yeah.
What about you, Demian?
So for us, I approached the process knowing that it was the first time raising money in this space. I was new to I guess the crypto investor space, so I said this is going to take a while, and I'm going to have to learn who's who, and that's why we did a 506B, because we basically purposely didn't do any general solicitation. I wanted to meet each investor. What I found is most of the people that are investing the larger checks, the first security token that they invest in, they've done utility in the past, but they know that their security token is something that is here to stay, and they see that what we're doing has a lot of merit in terms of building a company in a fast-growing AI space, plus developing a protocol that might have an upside for them. So we sort of are in I guess a very unique position that where we're catering to sort of two parts of their interest. But it's definitely something to be patient about, because when you went across the street to Consensus, you won't find patient capital there, I think, at least in the hallways. You have to really sort through and get to know the people that are building these networks of much more patient and long-term capital.
Yeah. With the security token issuance, or in your case, the utility token issuance, there are a lot of moving pieces, especially now with so much uncertainty. Maybe we can start with you, Gene, and we'll go down the line. How are you balancing all the elements of the issuance with just maintaining the fundamentals of running your business and building your business?
So maybe I see it a little differently, and I don't actually see that there's any uncertainty in the law at all. I believe the law for security issuance is perfectly clear. The problem is people don't like what the law says. So for us, we've complied with the law. We know the regulations. We understand the regulations. So the regulatory side of things isn't our problem. What we're spending a lot of time on, an enormous amount of time on, is speaking to people who are in the hallways of consensus, who want that quick flip, pump and dump, and don't understand that the law doesn't permit that. And then I spent a lot of time speaking to people who wish for 2017 to return so they can buy a utility token. And they don't understand that a security token right now is a transitional step, that we still have to do many of the same processes, or all the same processes we do in a traditional Reg D 506C offering, and that you can't go out and flip it tomorrow. So for us, again, I don't think the question is the uncertainty of the regulation, it's that I'm spending most of my time explaining the regulation.
So I'm an engineer, so I look at it a little bit differently. Like that bit license to me is very gray, but you may look at it black and white. But what I think is kind of interesting about what's happening right now is that when I describe all these different forces that are taking place and what blockchain offers as a technology, I see the rails and processes changing, right? And so as a result of that, the economic sort of legal structures have to somewhat adapt to that or simplify in some way so that it's a lot easier to understand that. Because in terms of innovation, there are a lot of different forces that are making the use of a blockchain ecosystem to reduce risk or get information or execute something a much easier way by which to facilitate these particular business models, right? But then understanding how these micropayments and tokens work in that world could be looked at in a variety of different ways. I mean, I think right now what we're doing is we're paving the path for something that's going to look radically different. And I honestly think that the financial space soon will look like the publishing in the retail space. Because I can remember when I was heading up technology at Disney and Hearst, people kept saying, oh, nobody's going to watch, on those little screens, blah, blah, blah. And then I remember when, Amazon and eBay came out, people thought nobody's going to shop online, right? And so now here we're in this new space, creating these new rails. And a lot of people feel like, the laws are going to stay and everything's going to be the same. And I actually see all these different forces converging and changing the way things are done. And so I honestly don't think that the traditional rails are going to stay. Maybe the laws do, but the way things get done is probably going to look very different from what it has looked like in the past.
If there's a bet there, I'll take the other side.
Okay, I knew you would, but
How much are you both wagering?
Is this like in the consensus and unlimited amount of Bitcoin? No, I'll go for the trading places. I got $1. So
it'll be worth 10 cents by the end of the year.
Yeah. So just on that, just so that we understand my position, I'm not necessarily supportive of the status quo. What I am is very aware that in order to get a change, we're going to have to get Congress to act, that the regulators operate within a box and they have to follow the law. And until we change the law, till we get to Capitol Hill and kick some ass, we're not going to see the changes. And the traditional financial system has been built in a certain way because of years and years of experience. So we, as much as the technology is outstripping the financial services space, we shouldn't expect radical change because the financial services system is built specifically not to change radically. That's reality. But I got my $1.
Any additional thoughts on that?
Well, I remember IP telephony in the late 90s and how, telephony was regulated and people were up in arms about, oh, what could you do over the internet? And, that's radically changed. It took a long time. And also, yesterday was a big day in the lottery, in the gaming space, right? That took 10 years to change, right? And I know people who were innovators in that space that basically had to walk away because they didn't want to go to prison, right? But that eventually changed. And if you look back at the .com era and all of the innovation that took place, a lot of it may have looked like pump and dump, but there was a lot of technology and infrastructure that was created during that period of time that created the opportunity for the next wave of innovation. So I actually do realize it's very disruptive and moving very quickly, and there are a lot of moving parts, but I do see change.
To misquote John Maynard Keynes, I agree with you in the long run. But in the long run, we're all dead.
Matt, do you want to talk about what happened yesterday and how that affects Lottery.com?
Nope.
Okay.
No.
I'll talk about it.
Moving on to the next question. So back to the previous question.
Going back to the question about a distraction, yeah, I mean, it's definitely, at least for us, we're small, 20 people. I've been pretty much doing this for the last couple months. I have a good team that continues to execute, but it is a distraction, especially if you're taking the time to know who the investors are. We don't have a Telegram group. I'm not meeting people online. I mean, I'm sort of doing the old school stuff of trying to first of all, find who are the nodes that connect to you to the right people, and then basically continue to expand from there. So it's a tedious process because there's a lot of risk getting the wrong people involved in your company.
Matt, what about you? Same question. Balancing, building, not that other question you don't want to.
That's fine. It's fine.
Building your business while all of these demands of issuing a token.
I mean, fundraising is distracting always, right? For any founder and entrepreneur, it's always distracting. So there's nothing new or unique about that. It takes up a whole lot of your time, and you go on a roadshow and you talk to entrepreneurs, and your business suffers as a result. Or you talk to investors, sorry. And there's no argument there, right? So I like your tie. It's very. It's sort of in a nutshell.
His side?
No, it's a sarcastic. I don't like your tie at all. But it's not your tie. It's everything that a tie represents, right? And so, but like,
no, I like your tie.
I could have feelings. Fact is, I'm a banker, so I don't, but I could.
That's exactly right. But like the crux of the conversation is what it comes down to is the other side is like, what is a utility token, right? The argument in the US is we are selling software management that the price of increases because we do patches, right? Like that's the core of the utility token conversation. So then in that case, then you have to go to a security token, which we're cleaning up on right now because that means we're the only tokens offering a financial interest, right? Everybody else is offering software patches. So the appeal to investment banks who want to get into this awesome new asset class and want to figure it out, but don't know what they're doing and are reading it for the first time. When they go out and they look at like the market, there's only a handful of like legitimate companies that have an opportunity, right? And that's going to continue to move up. But you're absolutely right, which is that as the technology comes, I think it does look a whole lot like telephony VoIP, right? Which is it will democratize and force everything. It will happen fast, right? I think the cycle time for that will be faster than 10 years or 5 years, but it's inevitable, right? It's inevitable.
I think there's no question it's inevitable, but I think the one thing that utility token model doesn't do, by definition, is give investor protections.
Oh yeah, for sure.
And
they're
that's
selling software. I'm selling dollars.
I'm not so sure that some of those investor protections actually do that much anyway, right? I'm an engineer, so I can say that.
Yeah. Gene, any thoughts on that comment?
It's fun to watch.
I like your comment. Actually, you said it best. The number one investor protection is the right to sue somebody. And that's an inherent right in the United States. We love suing people. But if we think about what an investment, so here's my problem with the security token, a utility token. All right, I'm going to give you my problem with the utility token. Utility token, you're basically doing a value transfer from the investor to the person who's selling the utility token, hoping that they will do what they say with only legal recourse in order to enforce them that they do that, hoping that they will deliver on their promises at some point in the future, and hoping you see a return with only the protections that the United States has had for over 100 years. So we are talking about the blockchain as being trustless. We talk all about being trustless, but what I'm listening to is the greatest leap of faith I've ever heard. I'm trusting some guy I don't know to deliver something to me some point in the future with money I'm giving him now with no hope of recourse. I'm sorry, I don't get that.
Well, I have a different viewpoint.
I'm sure you would.
Let's hear yours.
So let me just start. So the token economy first started in the 1800s with prisoners because they used them to train prisoners because the limbic system responds to rewards. So they would give them, I don't know, some sort of awards and they'd get, I don't know, a beer or something. And they use it with autistic children today. It's very central to autistic children's training. But they also use it to get you into a store. They give you loyalty points. And there was just an article in the New York Times 3 weeks ago about American Express points. And if you actually get money back, you get 2%, but if you get points, it's only worth 1.7%. Well, it's interesting because I actually fly a lot, and they use the Delta card as an example, and they talk about how those points aren't worth anything. But if you have a certain number of points, you get to go on the flight first. You stick your bag in the overhead before it gets full, and then you don't wait at the carousel. So that token to me is worth not waiting. That's half an hour waiting, of my time. So this idea that these tokens don't have these other capabilities. So anyway, so when you think about these token economies and you have these ecosystems in which people are engaged and want these environments to succeed, whether or not it's a utility or security, it's a very different dynamic than I would say, Uber. Uber spends a lot of money marketing from the outside in to actually get enough drivers and riders. And it's been raining these last couple of days. You look at the Uber app and you think your car's coming and like, boom, it disappears. That's because they have surge pricing and all of a sudden there's another service they can get a ride on, right? That's marketing from the outside in. But like, for example, my boys, they're doing Roblox. They're marketing for Roblox from the inside out, right? So the dynamics are very different in the world. It's not just about the token, it's about the ecosystem you're part of. So anyway, I mean, it has so many more dimensions than just the value of money. And
yeah, I mean, I just have a trouble from your leap from American Express with loyalty points, which are fine, to Jesus coin, which
I didn't mention Jesus.
No, but I mean, my argument is in ICOs that are promising something and without any protections. I am absolutely not disputing loyalty points or game token points. Those sound really cool. But when we're raising money to build something off of an ICO, I don't think that's right. I think, if you have an existing ecosystem and you have the points just like you get in the gaming today, you're not selling those to raise money to build your product. And that's the part that I have a problem with. Selling on an ICO to an investor, you can call it a contribution or whatever you want, but it's an investor, and they're using that money to build their product, I think that should be regulated.
So you mentioned roadblocks. So when each of you thinks about your token issuance journey, obviously you've encountered some different roadblocks. What are the most innovative solutions that you've come up with to get around some kind of obstacle that you faced?
Hard work.
Yeah, that one is. Oh yeah, we definitely agree on that one. In fact, what she said.
Demian, any thoughts on that?
A lot of alcohol.
Who else besides me, by the way, thinks that Matt should try on Gene's tie and Gene should try on Matt's shoes?
Shoes.
I was looking at the shoes, man. I couldn't pull those off if I tried.
You're right.
Why don't we open it up? I see some hands up there. Yeah, let's open it up to some questions. I saw yours first. Why don't we wait for the mic?
Quick question for the entire panel, Gene, real quick. How much did you or are you trying to raise in your ICO? The second question for Gene specifically is A+ offering as a way.
We're trying to do 100 million, which is the minimum credible raise in the financial services space. And the problem with an A+ is the time, particularly if you have the word crypto attached to it. And also, an A+ is for want of a better word, a mini IPO, and you have all the associated costs associated with compliance. So I'm not actually a big fan of A+, just in general principles.
Next question. I saw a couple. Oh, I'm sorry. Oh, great.
Our 506B public filing is $3 million.
Is there a lawyer? I don't know if I'm allowed to say ahead of the PPM, but
Did you file anything or no with the SEC like 506? You put a number there.
Yeah. No. It's days. It's days from disclosure, but I'll say it's more than 100, and less than 500.
Congrats.
Thanks.
We raised it last year, so we're not raising. Is Mikhail still there? He was asking how much we raised.
All right, next question. I saw a few hands. Yep.
One second. Could anyone, in February 16th, the FINMA in Switzerland issued their security token, pricing token, utility token regulations, and seems to be a laissez-faire approach, but they have strict guidelines, and it's not easy to comply, but those who comply will issue security tokens. What is the comparison? Does anyone have a comparison between the current state of the art of security token regulations in the United States versus Switzerland, for example? Of course, every jurisdiction has its nuances.
No. So we're setting up our exchange in the United States. So it didn't make sense for us, given the fact that our raison d'etre was to be a United States-based financial services firm. So we're doing a Delaware corporation, period. We're raising money under Reg D and Reg S, period. So I didn't do the analysis.
Just to that point, that because the question was raised on hurdles, I think that there's there's a lot of lack of clarity amongst traditional service providers, because oftentimes you'll talk to an accountant and a lawyer, and they're asking you questions, and you think, wow, aren't I paying you? But so I think that that's one of the biggest issues, is that things slightly change in different jurisdictions. And if you're not aligned with somebody who really knows this space, it's really difficult to even know what the right path to take is, because your traditional service providers just don't have a sense of that.
So you need somebody really aligned, like, I don't know, Allison from Catton, perhaps. Shout out to our law firm.
Please wait for the mic, but we'll go to you next.
Hi, this is a question for Gene. You talked a lot about regulation and the environment, and you said you weren't supportive of the status quo, but what I heard is really a lot of respect for the status quo and the regulatory environment. Is there anything you would change in financial regulation as it relates to cryptocurrency and security tokens?
Actually, that's a fascinating question, because you've heard me talk about regs, and I do appreciate regulations because I think we need them. But the one thing that I think is antiquated that we should remove before we talk about anything else is the accreditation standard. I don't think in today's world there's any correlation between the amount of money that you've made in the last 2 years and your financial sophistication. In fact, a lot of people that I know that... So I'll leave it there because I got an applause.
That's good.
So there's a statistic that 75% of startups fail, VC-funded startups. So do we think that these are pump and dumps, or do we think that these are companies that just don't execute properly?
We think that those are companies that don't execute properly because we give too much faith in VCs, right? Like, so VCs are supposedly super smart, and people buying tokens are dummies. That's the argument, right? Like, that's the point. But probably the stats are corollary. Well, it's the same behavior, right? But like in the crypto world, we label it a pump and dump because we don't respect the sophistication, like you said, of the quote unquote investor, right? But like, if you can dupe a VC into cutting your check, cool, congrats.
But I also think that the technology is very different. Just like when you went from enterprise to cloud, and then you go from cloud to blockchain, not only are the economic models different, but the technology and how you develop it is different, because you're talking about an ecosystem where you have many players at the table, and it's a little bit of a different process in terms of gauging people, not just at the financing layer, but in the software development and engaging all the partners. So it has a lot of dimensions that are fairly new, and so just in the same way that from enterprise to cloud, you had a lot of people trying to figure out, okay, I used to get 6 figures for an enterprise license and then maintenance money, and now all of a sudden I'm getting $25 per seat. Like, how do I make up my development costs, right? So it is a different technology and a different model, and so it's not like everybody's going to figure out the day one. So it does have some challenges with respect to figuring out all of those pieces, and then you add the security piece on top of it, and it adds yet another overwhelming piece as well.
I think you've asked a brilliant question, because if I look out in the industry, particularly the tokenized world today, I see incredible innovation. And I take my hat off to some of these brilliant ideas, and I think they're going to be world-changing. The tiny problem that I have is that the money is going to these guys with brilliant ideas who may not necessarily have the skills or experience to execute, particularly in a regulated world. So what we're seeing is a lot of capital flowing to people with the bright ideas without the ability and proven experience to execute. So what I would like to see going forward is the returning to a pairing, and the pairing of the technical brilliance with the business acumen to execute on those ideas. And I think that'll be something that we need in the future. And right now I'm seeing capital go to places that aren't necessarily going to bring us to fruition their ideas that they're presenting. And I think that's crowding out the ideas that could use the capital.
I mean, one of the issues, obviously, with this industry, if we look at utilities, is if there's some regulatory force that shuts down utility exchanges, pretty much all those ideas are dead. There's no exit, right? To the tokens. In the case of a security, there's still some very big unknowns, right? Are there going to be exchanges? When is this going to really be liquid? If you take if you're a company raising equity through a security token, there's a shutdown potentially and other source of future capital. So I think both sides have issues, but definitely the pure utilities. As you said, there's a lot of young people with maybe not enough experience to be able to navigate a world if it becomes really more complex than where it is today.
All right, so I just got the hard stop signal, so we're going to have to end the panel there. So how about a round of applause for the panelists here? Thank you very much.